Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Corbin, Ed Carson with a look at the market for Monday, June 26th, where the NASDAQ led a sell-off today. Those mega cap tech stocks, they've been leading the market this year, Ed, but they led the sell-off today.
Yeah, they sure did. And Nvidia was one of them. It wasn't necessarily the biggest loser, but it was definitely a notable one coming down. Lam Research showed some positive action. So did On Holding.
Yeah, we'll take a look at those stocks first. Let's analyze the major indexes. The NASDAQ today down about 1.2% by sessions close. The S&P 500 down less than 0.5%. The Dow just slightly negative on the day. And small caps actually up today. The Russell 2000 was on pace for a gain of about 0.4% heading into the close. But Ed, if you see one index leading and getting so extended, can't be too surprised to see it have a day of underperformance as we're pulling back. But is it bad to see this, or is it expected?
I think it's expected. It's probably healthy. It needed to come down. Now maybe it would have been nicer if it did this a little bit more gradually. But we've seen this on one day. The NASDAQ has been the biggest loser on the pullback. On other days, it's the Russell, and other so it isn't. It doesn't necessarily matter. You don't want to get too hung up on which day. It's just like, in general, the market is in a pullback. Some stocks and some indexes will look better on one day than the other. This is pretty healthy in the sense it needed to come down. It's still a fair amount above the 50-day line. I mean, not saying it's extended necessarily at this point, but pausing here for a little bit would be good. Provide a little more room once presumably a rebound takes place. Of course, we can't be sure that will get a quick bounce. I mean, I think the assumption has been this is a healthy pullback, but you always have to keep in mind there's the possibility it could be a more serious correction.
Yeah, absolutely. We're pretty darn close to that 21-day line now on the NASDAQ, just 0.3% above it. So if we do see a continuation of the weakness tomorrow, that could be key. Are we going to hold at or around the 21-day line? Are we going to get a reversal and a bounce off of that level, as we have seen in prior power trend type markets? Or are we going to need to come in more, maybe 13,000? But as you said, another scenario is maybe we just kind of hover around this area, consolidate more, and let those moving averages catch up.
Yeah, and look, I think investors, we have no idea. Honestly, let's be clear. We have no idea what's going to happen. What you should be doing is looking, what is the market doing right now, and just reacting to that.
Exactly. Yeah, and I think it's helpful to play out those potential scenarios because that helps you be ready for whatever comes. But you're right. Instead of just saying yes, we will get support here at the 21-day, we will bounce. That's not what I'm saying. It's let's see what those different scenarios might be, and that'll help us react to what we're seeing in real time, as you're saying. Totally agree. All right, let's take a look at the S&P 500 now, just with a slight decline. It's still holding above its 21-day line by 0.5%, so still pretty close as it comes to that level in this pullback. The Dow fighting support at the 50-day line and right at the 21-day line. So this seems like a level where we'd really like to see blue chips get support.
Yeah, the blue chips and the Russell, those are areas where we'd like them to find support at these areas. We'll see if that happens. But yeah, so far they have, but just for a couple of days.
Yeah, and to bring in that boxing analogy you've been talking about all day, whether it was on IBD Live or on Twitter, IWM looks like it's kind of on the ropes here.
It is kind of the ropes. It looked like it tried to get up on top of the ropes, but fell back, and that can happen. So it's right in between the 200-day line and the 21-day line. So don't want to see that break down below here, and really would like to see a little bit more strength in that in the small caps.
All right. We also want to take a closer look at this breadth issue, which I think really sheds light on where we did, in fact, see the weakness today. Because if you look at QQQ, which tracks the NASDAQ 100, down 1.3%, but QQEW, the equal weighted, look at that, down just less than 0.2% today. So it seems like the selling was pretty concentrated.
Yeah, but as you can see, this is back to the 21-day line because it underperformed at times last week. So yeah, today it definitely performed better. Advancers beat decliners, I think, on the NYSE and the NASDAQ, especially on the NYSE. It was interesting given how, the 1% drop on the NASDAQ to see strong breadth. But that's day by day that what we're seeing here.
Yes. And another look at the concentration in selling. Here's FNGS. This tracks the FANG plus stocks, those mega cap tech names. So down 2.7% today, now coming down to the 21-day line. So this was clearly the area of weakness here today, Ed.
Yeah, and you can see how well it had held up until this point, and after such a big move too, that really advanced. So not surprising that at some point it took a hit.
Mm-hmm. And SPY, which we looked at the S&P, but just to kind of compare it directly back to back, down 0.4% today, whereas RSP, the equal weighted version of the S&P 500, up 0.6% today. So harder hit last week, perhaps, but stronger bounce today and right at a key level.
Yeah, so it's nice to see this kind of support. And so it doesn't matter who wins and loses, on any given day, but if they can find support at decent levels, that would be the ideal scenario.
Mm-hmm. And XLI, how about industrial stocks? Nice gain today, up 0.8% here after a recent pullback. So this is a non-tech area that's doing well.
Yeah, this showed a lot of good action. There's a lot of areas that showed good action, but definitely the industrials showing positive action here.
Well, one of 2023's market leaders, no doubt, has been Nvidia with an incredible performance. It is not immune, though, to a pullback. And we saw that today where it was down 3.7% on the day in above average volume, coming pretty close to that round number at 400 that I think a lot of short-term traders had been keeping an eye on. And now, Ed, it's about 2.6% above the 21-day. So that could be a key test. Is it going to find support? What is that going to look like? Is it going to bounce from that level? Can traders add there? Or is this above average decline the beginning of the end for Nvidia?
Yeah, it's hard to say. I mean, I think we've been waiting for, can Nvidia come down to the 21-day line and maybe find a chance to start a position or at least add to a position? One positive is that if this comes to the 21-day line, there's a decent chance that the NASDAQ will come to the 21-day line or thereabouts. And so there's a little bit of a sense that maybe you would get the market to bounce, as opposed to, because a lot of other techs had already come down. So, but we'll have to see if we can get that kind of bounce, because you don't know. We could come here and we just plow right through it. There have been some stocks that look, hey, they're finding support, and then they come right through it. So I think you definitely want to see strength before taking advantage of any opportunities here.
Right. I mean, with this kind of decline today, maybe, in the most bullish scenario, could indicate that this pullback is closer to being over than to starting. Whereas last week, it really felt like, well, this pullback is just now starting. We could see stocks come in more with a lot of high profile names now coming in, and the NASDAQ close to its own 21-day line. Do you think that raises the prospects of, if we are going to get a bounce, that it could be coming sooner than later?
You definitely see a bounce. And I think that's one of the things is that I think investors may have to decide, do I want to take a bounce? Because obviously you can't wait for Nvidia to jump 7% and all of a sudden then it's going to look extended. So investors are going to have to make judgment calls on some of these things. You certainly could see a bounce. And then the question is that the bounce that begins a new real sort of leg in this rally? Or is it just a one-day move that we've seen with some stocks like we did last week?
Exactly. Yeah. Because some bounces will hold at the 21-day line, while others going to need to come back to the 50-day, even in strong markets. So that'll be a good question. How strong is this market? We could soon find out. And, not all chip stocks were down today. LRCX, Lam Research, moved up almost 2% by sessions close. Volume was lighter than average, though it has been picking up in recent sessions, cleared a potential entry from a trend line, and as it was bouncing from its 21-day line, Ed.
Yeah, so those are positive signs. And there's also a short-term level. This is sort of a 3 weeks or 4 weeks tight. And it was getting above the meat of it to, almost, it was getting to the top of it. It didn't quite get above that, sort of the middle of that base where the bulk of the trading is in that. But you certainly could have acted on it, or you could act on it above there. Again, in the context of a pullback, that raises the risk. It did show strength today, and it's better action than on Thursday, because on Thursday it bounced, but when the market was rallying, so when tech's rallying, and this time it really did outperform, on in today's, so we'll have to see. It doesn't mean it continues, but I would also note that Micron Technology reports in 2 days, and Micron, a lot of memory exposed chip equipment makers, including Lam Research, if Micron says, you know what, we're cutting capital spending again, that could be bad news for some of these names.
Yeah, such a good point there. All right, well, we'll have to see how much this relative strength line moves up overnight or tomorrow, and if it can continue to keep moving. But definitely good to note that about Micron, because that could definitely impact this stock. Elsewhere, let's take a look at ticker ONON on our radar today with a gain of almost 3%. Volume was above average by the close, got back above its 50-day line, closed off highs and maybe a little bit of resistance right around some prior highs earlier in June, but a nice looking move today. Your thoughts?
Got above the 50-day line. You could probably draw a trend line from the top of that consolidation, and that would also have, basically the same thing or abouts. And so that would be a reason why you could get into it, much like Lam Research, hitting a little bit of resistance right at that point. You can take advantage of this, but it's also, there's just elevated risks. I think, again, one thing to do is take small positions, and then, if the market picks up steam, you add a little bit more is one way to try to go about it if you want to step in now. But just be ready to step back out, because this and a lot of other things could reverse, more if the market sells off more. But maybe with the market coming back towards the 21-day lines, there will be the opportunity for a balance so these balances will hold.
We'll have to see. The stock is currently about 4% above that 21-day line. So perhaps that could be used as a level on the downside to keep an eye on, in addition to Friday's low as well. All right, Ed, thank you so much for your analysis today, and for everyone for tuning in. We'll be back with more tomorrow morning on IEBD Live with the Tuesday crew, and we hope you join us, investors.com/IEBD Live, for all the details on that. We'll see you there, and we'll also see you right back here tomorrow at the close.